All right guys, welcome back. So we just had the quarterly close. We are now officially in Q4. We are expecting upside, but we could get a pullback before then, and I'll discuss why that is in a bit. We also have some big economic news coming up this week. We have NFP, jobless claims, things like that. And we also have the potential of a government shutdown in the US happening today, which we'll also discuss in a bit. But before I do that, please like and subscribe. Make sure the notification bell is turned on so you're notified of all future videos, and let's jump into it. All right, so first up, BTC. We're just going to do a quick analysis top down for the quarterly. So we're on the 3 months time frame right now. You can see we closed as a bullish market structure break. We closed above the previous Q2 high. So that looks quite good for painting a case for upside. We go down to the monthly. You can actually see, I thought this was an inside bar. Basically, that means the candle didn't raid either side of liquidity in these wicks. But we actually did sweep this monthly low. Now, it's a very small sweep. I wouldn't really even call it a sweep, but we did actually tag it. So, another bullish case for upside continuation. Where it actually gets interesting to me is on the weekly. So if we actually come here and just pull this line across, you can see that Q2 high is actually quite an important level. And what I'm kind of looking at this right now is this was a big deviation of the lows, and we're now back above that level. We had that big wick down over the past week, and we closed back above that level, and now we're just sort of looking for upside. We are potentially also, if I actually switch to the daily chart, I can see it forming on the weekly there, but if we just look at this, what it is, we do have this diagonal forming too. So maybe we get a push up to that, potential rejection, potential breakout, we don't really know just yet. But I think like high time frame, BTC is looking quite good. And I just think if we reference this weekly chart, this structural pattern forming with the deviation reclaim looks quite strong, and now we're just looking for upside. Now onto the daily chart. While we are looking for upside, there are some potential resistances ahead, and we are at one right now. So this is a 3-day supply level here. We're currently testing into that. We actually pull a Fibonacci from top to bottom. You can see we're right in the golden pocket of the Fibonacci coming into that key resistance level. So this is where I'm potentially looking for a rejection to pull back down into this IFVG area, this inversion FVG. Now, why I've got that area marked out, if we actually go from the lows with the Fibonacci to the current price, you can see this inversion FVG down here lines up with the 0.62 level on the Fibonacci. I think any sort of pullback this week, and I'm looking for a move down to around 111K. 112 to 111 is a level we've been discussing for quite a while in these videos, just because of the structural point over here. It was the old range we broke out, we retested it, we formed a new range. We've just sort of been chopping in between. So maybe this makes a lower high here, and we see a rollover down to take out those 107K lows. Now the 107K lows I've been discussing a lot in previous videos. You can see we actually front ran them. I wanted the weekly to sweep those, and that's where I was going to potentially load up spot for a move higher. We actually front ran them, so we're kind of in a weird spot right now in terms of market structure. So you can see we didn't actually make a lower low down here. We front ran this over here, so we actually bounced up. We're yet to make a higher high. So the kind of scenarios I'm watching right now. So scenario 1, and this is in no particular order, potentially we get a push up above the 117K resistance we've been discussing for a while. That would lead to a market structure break of this 116K high. Then we're looking for some sort of high-low pullback. Now where we're looking for that pullback to occur is probably this daily breaker in here. So you can see that is at around 113, basically 114K. Some sort of pullback into that before continuation to the upside is scenario 1. So if we do get that push up, break market structure up here at 118K, give or take, 117 to 118, I'm looking for that pullback into around 114 to get long. So scenario 2 is we reject here, we come down and we tag this inversion FVG at the 0.62 Fibonacci level before marking a bottom and start printing upside. So I don't have limits set there. This is potentially just where I'm going to look for a reaction to occur. If we do get a reaction occur down there in lower time frames like H1 Noodle reclaims, H1 trend reclaims, something like that, then I'll be looking to position into this. But this actually leads into scenario 3. I think if we come up here and reject and don't give any respect to this POI down here, I think those 107K lows, which I've been discussing at length on previous videos, are more in play. So maybe around the 106 to 107K level, we see some sort of bottom form. We can see the importance of that 106K level if we zoom out over here. Very important, like high time frame level has been respected time and time again. So potentially this just makes a lower high and we come down and take out this before some sort of bounce. And really if that happens, we're just looking for like price to come down here and reclaim that level. Now if it starts to reclaim that level and consolidate, we're looking for a push up, and this is where I'm going to take longer term swing positions for continuation up into the highs and hopefully fresh highs. Now what I wanted to touch on also, that 111 to 110K level, this inversion FVG down here, also lines up with the CME weekend gap that we just formed. So you can see this is around 111,500. Any pullback into that region is pretty much where I have this zone marked out here. And I think this is where you want to have your first alert set for a meaningful pullback. Now, if you did indeed watch the last few videos that I recorded, you'll know that I've been discussing the USDT dominance chart quite a bit. And indicated by the squiggle we did on the last video, it's pretty much played out. What we were looking for is we needed USDT dominance to sell off to indicate money flowing back into risk assets. So I actually had that. It's pretty much played out the squiggle to a T. We closed back below this key high time frame level, which is marked out on the 3-day, I believe. Yeah, so it's like a 3-day pivot level. We're now back below it. So this is a good sign so far. We also are losing the 4-hour trend in line with losing that. So, if this continues down, we're going to see more and more money flow back into risk assets. And obviously this will be a net positive if we're looking for upside continuation in the market. All right, Ethereum, I marked out this in the previous video, and this is so far having a nice reaction. It's basically the weekly / 3-day demand level down here in line with the 3-day money noodle. You can see the respect we're having for it. Now, what I wanted to see, as I indicated on the last video, was a 3-day tag of that and then a 3-day close above the 4K level, which we did get. You can also see the RSI is tagging the 50 level in the 3-day, as well as the stochastic RSI down here resetting. So, generally when the money noodle gets tagged into a key POI and you get the stochastic resetting, this is like a golden setup for me. But, obviously this is the 3-day time frame and the weekly looks much the same. So it looks very strong from a high time frame perspective, but that doesn't mean we just see it sort of V reverse out from here. This could well come down and chop in this region for a while as the weekly noodle catches up. So just because we are seeing a reaction at a key POI, it doesn't mean it's just going to instantly go up. So a bit of patience, but I think if we're looking to fill spot on this, we just want to see it hold above that 4K level. So maybe it comes down into this weekly demand and test it a bit more, which is completely fine with us. We just want to see this region hold. As long as this demand holds and the 3-day money noodle does, I'm just planning for upside on this coin. Just need to get a low time frame trigger. Now, the only problem I'm currently seeing for ETH is on the daily. So we bounced up, but we're getting immediately capped by the 1-day noodle. You can actually see there's like quite a prominent resistance level down here as well. Tag that and rejecting. So just like we saw the 3-day money noodle and 3-day demand providing support, we're now seeing a daily resistance and the daily noodle providing resistance. When you get the confluence of key dynamic and static levels, that's kind of where you're going to long or short. So while I'm not short on this right now, I am expecting resistance here, and I'm just looking for a pullback into that 4K level. So it's just potential, while the market chops, we may just bracket between these 2 points for a while, but each time we come down to lows, it makes for a nice accumulation zone for spot bags or swing positions. Now, as discussed, I am expecting Q4 to be bullish, but like I said, we could chop. Now, why is that? We actually flick across to Discord here. You can see Fabian's latest posts. I won't read them all out, but you can see them here. He also discusses the end of the quarter is usually accompanied by some volatility with the days before and after as funds rebalance their books. And we have the potential US government shutdown looming on Wednesday, which is today. If that shutdown occurs, a new budget fails to pass, which can be the result of a drawn-out negotiation by the main parties of Congress. Now, we're not going to see that until US session happens tonight, probably a few hours after this video is published. So not much to comment on that yet. But just in terms of sort of where we're at right now, I don't think you just need to go net long on the market just because we're showing some good structure on the high time frame and also because we have just closed the quarter. So generally with monthly and quarterly closes, I'm pretty risk off in the days leading up into it and the days after. Mostly because I think you get a lot of volatility and you just want to see the market show its hand. Now, as a momentum and trend trader, I'm basically looking for those trends to be established and then I jump on board once they are. So ETH right now, even though it's getting capped at the daily noodle, it is reclaiming the 4-hour noodle and looking quite good. So as long as it holds this, we can pretty much just play the game of maybe the noodle trends up here and maybe we see price go with it. And then eventually when it gets above this resistance level, which you marked out earlier, you can look for any sort of H4 trend retest there and have confirmation of a level reclaim, which would make this a big deviation. And we're also trading in line with the trend. Now, this is a money noodle, an indicator you can get in the Miles High Club. Link in the description if you want to join. You also get access to people like Fabian, who is, in my opinion, the best macro analyst out there. I'm not just being biased because he's in the Discord. I didn't know him before I started in the group. And, once I started to see what he was capable of, I now follow him every single day. It's kind of my first port of call each morning. I just read his updates and it gets me up to speed with macro and fundamental events because they're not my strong point. All right, quick one on Solana. So obviously the monthly level, which we have discussed time and time again, we did close under it on the quarterly, but I don't really care that much about that. We did reject, and didn't come back from that 250 level, that weekly resistance, which is where we took profit a few videos ago on the trade we were in. But right now, this looks fine on high time frame. I think a tip for many people is just to zoom out. If you're on the 1 hour, like trying to trade every up and down movement, getting chopped, just zoom out to the weekly, the monthly, the 3-day, the daily, whatever you need to do. I think right now we're sort of holding above that level. We came down into the $200 round psychological level, had a very nice reaction. We bounced off the weekly money noodle, and we're just consolidating now. So I don't think this just V reverses back out up into the highs. What's more likely is we just chop for an extended period of time. So as it stands on the daily, this is rejecting off the daily money noodle and sort of fighting to keep above that monthly level. So on the high time frame it looks good, but really all I want to see is for us to flip the daily noodle and to start trending up to sort of take positions in this. I did indicate on the last video I may take a short into this. I haven't done that yet. If I start to get a low time frame trigger that we are rejecting here off the daily noodle and the monthly level, I will look for that short down to the 175 level, which we've discussed before. Now, if you watched the last video, the premise of the whole thing, which I was going on about, was looking for that ASTER Perp DEX rotation into other Perp DEXs. And that was pretty much indicated in this zone here once we started to lose the H1 Noodle after topping out up here. Now you can see what's happened since then is we have made some reclaims, but they haven't sustained, and we're just sort of chopping through the H1 and just not showing any strength. So as that happened, I was mentioning that we were looking at pump, hype, AERO, things like that, and you can see the actual moves we had off that since the last video. So this is pump right here. You can see we came down into that daily demand level. We actually put in a 20, let's say 30% move by now. So pump's looking very strong. We actually had a very nice diagonal breakout too. Came down into the 0.62 to 0.71 Fibonacci golden pocket. And it's also reclaiming the 4-hour noodle. So if you followed that last video and took any positions on these things, you're up quite nicely by now. Hype is another one. It did a 21% move off the lows. This was that inversion FVG we were discussing. Very nice bounce, but you can see it got capped in the daily noodle here. This is actually something I took a trade in, and in the Miles High Club, I said you guys should probably take profit at the daily noodle because we're going to reject there. And since we were rejected there, we've put in probably a, let's say, 10% move down. But I think hype actually looks pretty decent right now. Where it's sitting, we just need to get above this key level at 46 here. So if we get above this level at 46, I'm just looking for that to occur, some acceptance up here above the noodle, above that level. And I'm pretty much looking for a markup into the $50 round number and then the $52 resistance up here. XPL was also discussed on the last video. Now you can see after the huge pump up, we've actually had a really savage bleed off with people TWAPing out of their positions here. What I'm actually looking for was on the hourly. I posted a chart on this morning. So a lot of people have been buying this $1 level, this round psychological number. I haven't actually taken a position in this yet, just because I haven't seen anything to bid. So I generally don't just buy round numbers for the hell of it. I want to see some sort of confirmation. And so far we're not getting that. What I was looking for was this to be a deviation. To get back inside here, it would flip the H1 noodle and accept back inside the previous range. Now if we get that, that'd be my long trigger to target the range EQ and the highs and potentially new highs. But you can see we're just continuing this bleed off. So even people who bought at that $1 level are underwater right now as price comes down into 90 cents. I actually think this needs to pick up quite soon. If it doesn't, we're probably looking for this to come back down to the point of origin. Right here, this is a 4-hour order block down here. You can actually expand this out if you want to just mark the whole demand level. But between basically 80 cents and 70 cents, I think this probably comes down here now. Now, I don't think it comes down here and just bounces out like everyone's been talking about on Twitter. I actually think it's going to come down here, form some sort of rounded bottom, probably chop for a while. And then you're just looking for a price to basically get above the noodle as it trends down. Once it gets above the noodle, you're looking for a retest into that, and that's where you can actually pick up some bids and trade in line with momentum and trend as we've been discussing. So right now, if you're looking for a position in this, I wouldn't touch it. Pretty much the points for me is a reclaim of 1.11 or a tag of this demand cluster down here between 80 and 70 cents. Once again, I think if it gets down here, you have time to build a position because I don't think it just V reverses out like that. Especially if the greater market bleeds off based on what we're seeing with macro event news coming up this week and how BTC and ETH are structured. So that's it from me for now. I'll be back in a few days. Please like, subscribe to this video, hit the notification bell, and if you want access to any of the indicators in the Miles High Club, especially the Money Noodle, which I've used on today's analysis, then the link is in the description. Other than that, be well, and I will talk to you soon. Cheers.